everyone, and thanks for checking out my channel. I'm gonna do the usual checkpoint midweek, just to go through a couple of markets, but mainly commodities. And starting first with the US dollars, we got some major development earlier this week as we broke that significant 1.17 level. I was waiting for that for quite some times, and it finally came. But potentially, I think short term that this is not going to move much further on the 4 hours here. Yeah, that's the 4 hours. We got that big divergence that did actually start nearly on the point of the breakout, or at the level of the breakout. So to me, that's pointing to short-term reversal to retest the previous support from that point. So we're having that falling wedge that is a reversal figure, or at least some temporary reversal. So I believe we could extend back down to back up to 1.17.4, but I believe that trend line could also be seen at 1.18. For that reason, I did open one position on platinum that is of course very much linked to the US dollar. We're having actually the exact similar figure, falling wedge on the resistance at 8.40. And I opened long a little bit too high, somewhere at 8.50, but I will keep that position. We're having a divergence as well with a massive drop here at 170, and then we got first divergence here, second one here. So we're currently trying to push through, but without the support from the dollar, I believe that will not happen, that we should clear that divergence at that point. And I think the target for platinum short term, so potentially this week, would be to break out here and go and revisit 890. From there, it would be roughly similar to the level we'll get on the USD, either here or here. Really hard to tell. Believe it might actually stop here, which is not such a big retracement, but that will depend how that trend line will act and how it will work. Is it weak enough, or are we going to touch the RSI trend line? In that case, then yes, we're going back up here, and potentially platinum could actually see a little bit of more uptrend, move to the upside, breaking a bit higher than 900, but I wouldn't hold much higher than that. I think the selling pressure will return, and the US dollar will continue strengthening very likely within the coming week or two. Moving on coffee as well, took also a long position on coffee, also because of the US dollar, but not only. I mean, got some nice reversal figure here with the 4 hours bullish divergence. They're usually quite reliable on coffee when we sit on a reasonable level. 110 is quite important, 109, 110. Has been acting at resistance support in the past a fair bit of time, and now we're having a significant divergence. So that's pointing to a correction that could actually bring the move back up to 130. I don't believe that will actually happen. Seems just a little bit too much of a stretch, but what we could see is a break at least to the top of that divergence. I think if we look on the 1 hour, no, that's the 1 hour. If we look at the 4 hours, we're also having a divergence here. That's not, sorry, that's not so obvious, but still valid usually when you double bottom, sorry, on the RSI like this. So we're having this that's pointing to that spike to retrace, and I believe 118 is a more reasonable target for that retracement. So that would look something like this from that level somewhere. So we could go for a double bottom actually at 109, so we'll hold that position, except if we really break that level and accelerate in terms of momentum. But here 118 is very likely. From there, still the plane unchanged. I believe I will go down and break lower. I think we're going to see new lows, not new lows, but at least retests on that trend line at the bottom, sitting now at 95, where I would like to see some more obvious divergence on the 4 hours, or potentially on the daily would be even better. Now moving from coffee to natural gas, as I said, was not intended to trade natural gas, as we are basically just gambling ahead of rollover date. What we had, it would have been a different time. I would have actually opened long here, because we had a major divergence that did actually start from that point here and was looking for that correction to touch the upper end of the channel. But now that we are in rollover, everything can happen, and that October contract could still potentially be under massive selling pressure should the speculation return about the storage or anything. So don't want to risk it. And holding ETFs, they are already rolled to November, and of course November not moving that much, but still moving. And I think currently I believe we're sitting at 1.8, which is crazy really, to have such a gap. It means that visually here we're going to roll over somewhere here, which is actually just slightly above the gap we had here. Trying to show this in the 4 hours that we have last winter, when we let that island reversal at the top here. We left the gap open at 277, and now we are going probably to close it just right with the rollover. Very incredible thing. I don't actually know if such a gap is actually counting to fill in another gap with such a massive move, but anyway, that's very quite impressive really, what has happened on natural gas. Now looking at what could be the next trade, of course shorting. I believe we are still too early to accumulate long, and of course at that point when we roll over to 280 for just November contract, there's no chance that we'll actually get any sustainable move to the upside. So I'm looking for a short opening here. So we're gonna get that 290, that will be key, and from that open on the rollover here, I'm trying to zoom in a little bit more. I'm expecting some move to the upside at the beginning of the contract, then it will start pulling down slowly and retest, of course, the 270. That's definitely an absolutely key level, and either we're going to break straight away, but ultimately I think we're going to go back down and fill the gap, and we could actually go down as low as back to 2.1 potentially. So that's a huge move to the downside, and that could actually happen relatively fast. If we look at the way it happened on the previous rollover, we had that one here that was on 2.52. It went up to 2.72. So usually we get about 0.2 on the open. So if we get 2.8, 2.9, could stretch to 3 maybe, would be the target basically to open short position on natural gas. So we'll be waiting for something similar than what we got here. That was really a clean one here on the divergence we got here on the 4 hours. That's usually working very well. We can see on the 4 hours here again, new divergence. We got that huge spike. It wouldn't have been for that rollover trick, and the October contract, the bid at risk, would have definitely opened long on that point. That was definitely a nice entry point, but in my opinion too risky to get the position actually going back to zero, and I don't want to take that kind of risk on my account. So yeah, that's for natural gas. I think for this we're waiting for the 25th, then probably next week we'll see how we go, but by the end of next week maybe going to start building some short position. And finally looking at crude oil. Crude oil has been moving relatively as planned, with the correction down from here, and that large divergence on the 4 hours did actually get cleared up, but just remembering that we are actually inside a much bigger figure, trading something that's actually here in that rising wedge and that break, and I'm still looking at the same target from that rising wedge. Either we take it from here and from that point here, got to 36 from that, and of course in terms of the divergence we're looking at that point here that is still looking at 34.6. so we cleaned the first target at 36, bounced back here, so I did reload short position from above here, but sitting with an average that's actually not that good. I did start accumulate a little bit too early. but I will hold that position except if we start breaking about 41.5, which I believe is quite unlikely in the coming weeks, and I believe we're going to continue that move down until when we break that bear flag. Got a first target at 37 for continuation down at least to 34. We're talking here about probably mid-October, end of October for that trade, and definitely will hold until then. So yeah, that's about it for tonight. There's many other stuff that happened that I didn't cover, but basically for the trades I took, that's pretty much it. I'll go through into more details potentially for natural gas over the weekend, as we'll get the target for the short entry, or at least what level we'll be looking at. And until then, sorry, I wish you safe trading, and I speak to you soon. Cheers, bye.